Boy, it's been a busy day on the political front, some of that bleeding over into the equity market. I'll be speaking with Chris Conway from the Australian Stock Report about that shortly. But still, reporting season, we are really at the climax of this full year reporting season. Let's take a look at how that's impacting the top and bottom movers. Coming through today, Super Retail, a slight beat on expectations, and that is doing good things for its share price. Overall, actually up by 8.6%. The purchase of Macpac proving fruitful for the company, and that was the big news at the previous reporting season. Now, Monadelphous Group is also getting a boost today in the wake of its results. Revenue looking pretty good with growth of 41%, and that's up from guidance of about 30%. No quantitative guidance given for FY19. However, they are indicating lower construction revenues for the full year. Focus Communications up by 4%, Xero up by 3.5%, and Sarai Resources up by 8 cents. There is always a flip side. Now keep in mind, this is by percentage change on the 200, and look no further than Amcor for the big weight on the market overall. The full year profit was marginally below analysts' expectation, revenue below analysts' expectation, and raw material headwinds. This is a bit of a theme emerging from reporting season, likely to remain into FY19. Ardent Leisure up there, Ausdrill, Infigen, and Pilbara Minerals. Back to the story of the day, though, with Prime Minister Malcolm Turnbull surviving a challenge to his leadership by Peter Dutton. Mr. Dutton nominated for the position but failed in the party room with the final vote 48-35. Now, Mr. Turnbull is now trying to pivot away from leadership and back to policy.
We know that disunity undermines the ability of any government to get its job done. And unity is absolutely critical. We cannot allow, as I said in the party room today, internal issues to undermine our work, to create a risk, a real risk, that Bill Shorten will be the Prime Minister.
Well, Peter Dutton has quit Cabinet and will now move to the back bench following the unsuccessful leadership contest. Mr. Dutton, though, has not ruled out another challenge, but says he holds no animosity toward the Prime Minister.
The problem is that Bill Shorten would be a disaster as Prime Minister of this country, and I believe that I had the best prospect of leading the Liberal Party to success at the next election. Now, that wasn't to be today, and I understand that. I respect the outcome, and I fully support the Prime Minister and the Cabinet, obviously.
All right, let's check in as to how this may or may not be impacting the local equity market. Chris Conway, Chief Market Strategist and Trading Strategist at the Australian Stock Report, joins us live from Melbourne. Chris, good to see you there. We know that markets hate uncertainty. We're seeing selling in the Australian session. Do you think traders are hitting the sell button based on this leadership instability?
Good afternoon, Nadine. Yeah, I certainly think that they are. Look, everyone said it that's been on the show so far, so I won't say it again. You've already said it. But yes, absolutely hitting that sell button. And now's just sort of waiting to see what's going to happen with this leadership spill, whether or not there'll be another challenge. History would suggest that there probably would be, particularly given the voting margins. I think the last time there was a challenge on the Labor side when Rudd challenged Gillard in the party room, Gillard had a much better share of the votes and then was toppled anyway. So if that's any indication, we might not see Malcolm Turnbull in the senior role for too much longer. But yeah, look, I think ultimately the market will look past this. We haven't had a full-term Prime Minister since John Howard in 2006-07. So, we should all be used to this by now, and I wouldn't be surprised, provided we don't see any calamities on Wall Street overnight, that we bounce back and recover a lot of this lost ground today, because Australian investors have typically shown that they don't really care who's in office.
No, and if you look around the region, some pretty strong performances coming through as we continue to anticipate, I suppose, a cooling in trade tensions between the US and China. And even though we're seeing some yen strength, I mean, the Nikkei is up by about 0.25%. So the Australian market really is the outlier there today. We'll see what tomorrow brings. No doubt, though, reporting season still front and center of traders' minds as well. We've had a couple of big names today. BHP, I suppose, the biggest. What do you make of the result? I mean, really tidying things up, repaired its balance sheet, shareholders seeing ample cash. So what do you see as a focus for BHP management going forward?
I thought the results were pretty good, Nadine. Look, in line across most of the items. The dividend was a surprise to the upside, and the paying down of debt, or the debt ratio, was a surprise to the upside as well. I think what BHP is suffering from potentially is a similar affliction to what BlueScope suffered from, and this is the idea of sort of the peak of the cycle in the sense that this is as good as it gets. It's not something that I subscribe to, and I would actually be using this weakness, particularly as a trader, to take a long position in the stock. So, yeah,
so
like I said,
I'm curious, Chris, just to stop you there. So why do you not subscribe to the view that this is as good as it gets for BHP? Because, you know, even Andrew Mackenzie himself said that, look, is a little bit more apprehensive on the short-term outlook. You know, there's rising costs, there's CapEx spending that's necessary, and many think that we're sort of at the top when it comes to, I guess, the dying days of this commodities boom.
Well, that's exactly it, Nadine. I don't necessarily agree that we're at the end of it. I think, you know, it depends on where you place more weight. I'm placing more weight on the fact that we are still in a global growth cycle being driven by the US, which is dragging, you know, other economies along with it. Sure, there's worries about China, but they seem ever present and haven't scuppered things yet. The other short-term or medium-term catalyst for BHP is that $10 billion in revenue that they're going to have hit their books from the sale of their shale assets, which will be a positive catalyst. Now, again, I take the position of a trader, so I'm not worried about really what's going to happen in 12 months' time. My focus is more 3 to 6 months, which is probably the likely time frame for that return of capital to shareholders, and I think that will see a boost in the share price. So, yeah, I'm not sitting here forecasting that BHP is going to be great bet 12, 24 months out, but I think today's share price weakness, or the share price weakness that we have seen, is a little bit overdone, and if it falls a little bit further, then I would be happy to, as I said, take a long position in this one.
All right, let's hear what the CEO of BHP, Andrew Mackenzie, had to say in relation to China, which it does see slowing.
China is now such a large part of the world economy and such a big consumer of commodities that if you're in our business, you are always going to face you know, a significant amount of your profitability dependent on China. So China's going okay. You know, obviously we're very concerned about some of the protectionism that's out there. I'm reasonably confident that China will find ways around that, at least for the products that it buys from us. We already see signs that they're going to trade around that, look for exports elsewhere, and they're starting to look at ways in which they'll stimulate domestic demand.
Okay, so if you'd like to watch that in full, perhaps you can do so on Tiki tonight after 4:30 p.m. Chris Conway, Australian Stock Report. I'm curious to know if you see a trade potentially in Amcor. Shares are down by more than 4% today, $13.68.
Probably not so much a trade, Nadine. I will say, though, that our long-term analysts still like this one. They have pointed to, you know, a couple of problems with today's results. You know, we had them sort of in line with revenue and also in line with earnings per share. Dividends were a slight miss, 45 cents. Analysts had expected 47 cents. Depends on which sort of consensus estimates you were looking at. I know you mentioned at the top of the show that they were probably more of a miss. But I think the concern and why we're seeing some weakness in the share price today is their rigid plastics business, which accounts for 30% of sales, was 9% weaker, and that was due to the slower North American beverage units. So obviously not as many beverages being consumed in North America that are in those plastic bottles that we all consume. And this, you know, probably more importantly, this region has historically seen some declining volumes. So it is a little bit of concern throw into the mix. I think you mentioned it also that we do have rising input costs. So liquids, aluminium and resin have seen price increases of 50, 19 and 15% respectively. So you know, revenue sort of stalling, one of their key divisions on the decline at a time when input costs are rising. Doesn't make for the greatest of outlooks, but then you take into account the Bemis acquisition and the synergies that will bring, and you hope that that balances the ledger so that in those forward periods they can continue to grow, in quotation marks.
Okay. All right. Well, we'll continue to monitor that share price through the afternoon. Just away from reporting season, there is news, company news apart from that. Bingo Industries is in a trading halt today pending M&A and a capital raising. So the company's looking to raise $425 million to buy Dial a Dump. We heard from CEO Daniel Tartak a little bit earlier on. Let's listen in.
The most important thing about the deal is it really aligns with our 5-year strategy to be a vertically integrated waste management company. The major asset at Eastern Creek, we have the vision of building a recycling ecology park, which is the first of its kind in the country, and something quite special to really transform this industry. So we're really excited about it.
So that is Bingo Industries CEO. We sort of knew that this was a potential deal that was to be done. Growing very fast, that Bingo Industries. What do you make of this latest news and the outlook going forward?
Nadine, you must be rewarded. Last time you and I spoke about this one, because this is one we have held in our long-term portfolio for a while, you asked me very specifically about, you know, the next stage for this company and whether or not they could make a move like this and take that waste management and say turn it into energy or, you know, profit from selling the recycling. And I said at the time that, yeah, it certainly was a possibility, and they needed something in the narrative to shift from being a roll-up, which obviously what it started as, and, you know, gaining market share and gaining traction, and then doing a deal like this. So like I said, kudos to you for calling it out. I didn't have an answer for you at the time, but the answer is now here in front of us. And I really like what the CEO had to say about it being a 5-year, you know, sort of transition for the business. So there is now a clearly defined growth platform for this business. The deal itself will be earnings accretive immediately. So potentially, well, not potentially, it looks like on the numbers a good deal for shareholders. We're telling our clients who are in it to take up the offer when presented with it. So yes, we like it. And like I said, a natural transition for this company that seems to be well laid out.
Yeah, all right. Chris Conway, Australian Stock Report, always a pleasure. We'll pick it up at a later date.
Thanks, Nadine. Cheers.